Potential adverse effects of inheritance. Meeting inheritance tax liabilities. For most of us, inheritance tax is charged at 40%. It applies to the whole of your estate, including the value of property and investments. Most of us qualify for an inheritance tax allowance, known as our nil rate band. For a single person, the first £325,000 is exempt, and for a married couple, the first £650,000 is exempt. In this example, a married couple have a joint estate of £900,000. On the second death, the combined nil rate band of £650,000 will mean a tax of £100,000 will be payable, leaving £800,000 for their beneficiaries. HMRC require any inheritance tax due to be paid prior to a grant of probate. They say that you must pay some or all of any inheritance tax due before you can get a grant of probate, and that, in most cases, you must pay inheritance tax within 6 months of the end of the month in which the deceased died. After this, interest will be charged on the amount outstanding. You can pay in yearly installments over 10 years if the value of the estate is tied up in property, such as a house. However, if the executor or trustees can't pay the inheritance tax, the beneficiaries or donees, recipients of gifts made during a person's lifetime, may have to pay it. And you can only pay inheritance tax in installments on certain types of assets, usually those that may take time to sell in order to raise the money. Would you want to protect against this eventuality?